From the New York Times, nytimes.com/99cents.
Welcome back. We want to get more on Apple's earnings with Larry Haverty from Gabelli Funds and Amish Shah from Sierra Meyer Ventures. They are both Apple shareholders. And guys, it's great to have you with us because I really want to know, to both of you who hold the shares here, what you make of the quarter, first of all, and the stock's reaction, secondly. Larry, first to you.
Hi, Kelly. I think the quarter, the reaction is fairly typical. For the stock to work, Apple's got to move to a better neighborhood. It can't be looked at as a pure tech company because it doesn't have the thing that tech investors want, which is rapid revenue growth and margin expansion. It's more like a consumer company, like a General Mills. It has slow revenue growth. It has a great brand name. It has very, very stable operating margins, and it's returning about a third of its cash flow per quarter to shareholders. Now, you get this for 6 times cash flow on a running rate basis versus Coke and General Mills at 11 and our star Beam, which just went out at 20 times. This is a very, very cheap stock if it moves to a consumer product neighborhood. And you have kind of a call option in the stock, Kelly. If you look at it on a couple-year basis, depreciation in the company has tripled. Okay. And the company's building stuff, and I think there's something new on the horizon. When it comes, I don't know, but I look at it as a cheap consumer product company with a call option. I'm a buyer of the stock. All right,
Amish, how do you look at it?
Yeah, Larry brought up a lot of good points. When he mentions General Mills and mentioned some of these others, I'm very bullish on it. I think it's very undervalued, as Larry's saying. The way I look at it is you could get in right now with their PE ratio a little under 13, while Amazon's over 1,000 plus. Google also is about 30 plus right now. So I really like it compared to the PE ratio. I really like the 150, I think it's actually 140 billion in cash that
about
they have.
160 now, yeah.
Well, even better, right? And don't be surprised. The 3 other components I see coming out this year, the iWatch, when they talk about new products, I think that's going to be huge. They're talking also about a television, which, again, is going to be huge. And the other part that I really love is the mobile payment services, where you guys have been talking about a little bit. They have 600 million credit cards on file, where the PayPal only has about 150 million. So if you look at that, and if they can monetize on that, even with all that money, they could go out and buy PayPal or eBay.
John Ford, I just wonder, it's never been more important for Apple to innovate. It's never been more competitive. Are they going to attract top-flight engineers if they're General Mills?
That's the thing. I mean, Apple at its core is not General Mills. I still eat the same cereal I did 10 years ago. I can't use the phone I did 10 years ago. That's not what makes the engineers tick, what makes the management tick, why they're paid so much to be like General Mills. So I can tell you, they're not going to be satisfied with this trajectory, even if some investors are for the long term.
Maybe
they want to come out with a hit.
What the stock needs for the long term, then? Is this a kick in the pants?
Well, I mean, the run-of-the-mill employees, they're watching the stock price in a way, right? Because that's what they're buying their houses in Silicon Valley on. But what's driving them is the desire to create the next great thing that everybody's going to use. They're a growth company at their core. If they're not doing that, they're not going to be satisfied.
Go ahead.
Let me jump in there. Being a tech investor, we're dealing with a lot of startups. If you noticed, they've had over 10 acquisitions in the last year. Apple is notoriously buying smaller companies that no one's ever heard of, taking their technology and spinning it out. Just like you saw Google buy an artificial intelligence company for about 500 million recently. You're going to see Apple buy a lot of different acquisitions, and they are going to innovate. It is still hot to work there. In fact, I would not be surprised if this stock hits 1,000, and you quote me on this, in the next few years.
We will, Sarah, real quick.
My biggest question for the bulls is going to be the China question. Apple says that it gets more than 60% of its business now internationally. China was a huge bet, 700 million with the China mobile customers access to that, yet it's expensive, and they're not willing to budge on the price of those phones, that luxury. Is that going to go down in China, Larry?
Another important question. And Larry, we got to leave it there. I'm sorry.
There are a lot of people in China. I'm very happy as an investor in the Macau hotels. I have little doubt that there are enough people there that can use the product. And remember, this product, the company Apple is very much like John describes, but the product that Apple has, it obsoletes periodically. So every 3-4 years, you have to get a new one. So you have an enormous stability of the product unless somebody can come up with a better one, which I think is
760 million.
I wish we could continue it for 10 minutes. We're out of time, guys, but thank you for joining us from the shareholders' perspective. And more on Apple's earnings coming up after a quick break.